Now, guys, it's time to short the S&P 500 at 5633 or better, because I believe that this month of July, there will be selling, especially from probably tonight or early next week. All right, because the statistic shows that the market is kind of overbought, and I don't think that you should be holding any long position right now. But of course, again, with Morgan Stanley, Mike Wilson coming in, calling for sell too, I think that maybe we have a fair chance tonight. But the thing is this, it's not a sell to hold all the way, because I believe that by August, there will be a bottoming effect, and that is where we're going to buy into the market. So let's go into details right now. Disclaimer apply as usual. Now, first of all, let's just recap what happened 6 months ago. Now, 6 months ago, we know that many strategies were all calling for the S&P to trade between 4,700 to 4,900. As a matter of fact, the average target was 4,861, okay? It's actually compiled by Steve Henrich, one of the correspondent on CNBC. And very clearly, he did a research on this, and we can see right now that the JP Morgan is one of the bearish one, calling for 4,200, while the highest was Yardini calling for 5,400. I remember this, I covered the story. So where's S&P right now? My God, it's at 5,600. That means that 6 months ago, all right, versus now, everyone has got it wrong, okay? It's not only me, but almost everyone has got it wrong, in fact. So the question will be, what's next? Now, if you recap what happened, I've covered the story. I said about what Mike Wilson say. He has turned from a bear to a bull. Remember, that was about 1 month ago. I mentioned that Mike Wilson calling for a buy right now, and he was looking at a figure. He was looking at the S&P to travel to 5,400, okay? He was completely wrong for 2024. And in fact, BMO, Wells Fargo, Oppenheimer, Morgan Stanley, Deutsche Bank all increased their target to 5,004 to 5,006, okay? All right. And the thing is this, the most bullish one, I'm looking at 5,006 by this BMO, okay? So the thing is, right, we are now at the point whereby everyone has called for, and this isn't that time to get down from the market. Now, if everybody is now looking at this figure, 5,004 to 5,006, and the S&P trading at 5,633, I think it's time to get out. So in fact itself, right, we told you guys that the S&P, if it moves up, the Dow should be trading about 39,700, and it has really happened. And that's the reason why I'm calling for the sell right now. Okay, I expect a lot of people to be calling me nonsense stuff. Leave comments at my comment box. I'm fine with that, but I'm going to stick to my principle here. Now, I'm going to explain to you why is that so. Okay, let's go into detail. Now, first of all, this is the chart from the S&P since 1998. Okay, since 1998. All right, I'm going to write down for you. Okay, so from this point here, we connect the dots, okay, we connect all the dots and we extrapolate, that's where we are. And in fact itself, right, you can see there was some resistance back then, but the market was trading above the moving average. So we know that the market go higher, and now we are now traveling at the high. So the thing is the high now is at 5,635. So I'm calling for a sell at 5,633. Okay, now I'm not here to like predict the highest point of the market and then after that expect the market to crash. No, I'm expecting a pullback. I'm looking at a pullback of between 5% from the market. Okay, a 5% pullback from the market. So that's the reason why I'm asking to take profit. Okay, that is my whole objective here. Now, if you look at it, okay, we combine this with the unemployment data, you can see that whenever there's an uptick of the data, we do see the market pulling down, okay? Every time you see an uptick on the unemployment data, there's some selling in the market. So the question is this, now we are definitely much higher than the usual, the last 6 months. And with the RSI now, you can see all at the high level, it's kind of clear that it's time to take some profit, okay? Now, if you look carefully, guys, if there's going to be a sell down to the 50% mark, or even better to the 75% mark, that will be the best time to load heavily in the stock market. So as a matter of fact, I believe that we could see the 50 marks when we come to August period. And that is where I believe that I'll come in strongly and say it's time to buy into the market. So please, before you comment, listen to what I just said. Remember, it's a two-step approach on this. Sell first, buy back later, heavily go long. All right. So the last 15 minutes last night, we saw a huge pump up. It seems that there's some leakage in the CPI data, right? Because tonight is a CPI data, people are getting very concerned. And that's the reason why I think that to play safe, it's time to take some profit off the table and then short slowly. Now, it has been this is the 5th of July chart. So plus now, we have about 50 days, okay? 50 days of market without a decline of 1%. And you can see that generally speaking, whenever that happens, there will be some pullback. Now, based on the what Morgan Stanley Mike Wilson says, he believed there could be a 10% market correction before the election. And look at 5, look at 10, okay, let's let it be. And in fact itself, right, because he said that the uncertainty of the US presidential campaign, because we know that both Donald Trump and Joe Biden is really neck on neck. And of course, he expects the third quarter to be a bit choppy. And of course, Goldman Sachs also came in, they modeled a painful 2-week stretch in August if the earnings disappoint. And JP Morgan, Chase, Andrew Tyler, bullish but less conviction. Citigroup, Scott warns of a potential pullback. So you can see that generally now everyone knows that, hey, come on, man, it's time to take some profit. And if you look at the total put and call ratio, oh my goodness, this is terrible. In fact, it seems that all the bears have disappeared. Now it's so low, it's back to the 2015 low. Oh my God. So we see what happened after that. The market, the put call ratio shoot up. So which means that profit taking comes in, the buyers have to take profit off the table, the sellers come in. So that was how it inverted later on. So with this as a chart, if you compare to the retail gamma chart, you can see that, oh my goodness, the retail's buy calls are really at a high level. It seems that everyone is just buying. And it's so high at the moment now, I just feel that it's time to move away. It's a compelling reason to do that. So tonight, CPI data, it seems to be like this, okay? The previous number is 3.3%, and now the market is looking at 3.1%. I'm kind of curious here because we all saw what happened to crude oil price, gasoline price, but there is some pullback in the property market, the rental side. So that's the reason why many strategies are looking at a lower number. So you look at the CPI data tonight, it's going to be highly watched. Everybody's watching it right now, and you can see all along have been moving higher. And only the last 2 months, we saw a bit of decline from 3.5% to 3.3%. So there is a very good chance you can see 3.1% tonight, okay? Why is that so? Because so many people are looking at that. Now, if the number comes anything higher than 3.1%, the market is going to break. So that's the reason why Morgan Stanley, Mike Wilson says there could be 10% correction very soon. In fact, itself, he gave a very detailed explanation, and even this report included what Goldman Sachs Scott Bruner said. And of course, the main thing is this, okay? Take a look. The CPI estimate for tomorrow, which today, that Citi, BMO, Citatel, Barclays, JP Morgan, Wells Fargo, all looking at 3.1%. In fact, TD and Scotiabank all looking at 3%. Only Morgan Stanley is looking at 3.5. I'm kind of like, okay. It's like, you know, it is that the average is already 3.1 or the consensus 3.1, and Morgan Stanley, where Mike Wilson is going for 3.5. It's a little bit like, trying to force it in. So the thing is this, we have to understand that the composite has been hitting new highs, right? But many stocks are falling to new low. This is a very dangerous thing. We saw it before. It happened back then in 2000. If you look at the chart here, it happened before. And then, of course, what happened? The market did not pull back. In fact, it went all the way higher, which is what's happening right now. And then the selling was crazy, okay? So it happened again somewhere in 2007 and 8. The market continued to go higher before the selling comes in. So it happened again, the selling came in. So now, guys, if you're asking me, it's not here, guys. I thought it was here. No, we are here. Oh, gosh, we're so much higher. So guys, I think that we may have a bit of movement and then there will be some selling. So that's the reason why I think that you should be taking off your long position in the market right now. Remember, I'm not expecting the market to crash. I expect a 5% pullback. I'm gonna write it down one more time. A 5% pullback in the stock market, okay? Now, why 5%, not 10%? I think that the market is so bullish right now, it's very difficult for a sell, okay? But the main thing is this is the VIX seasonality pattern, and it's something very, very important. Take a look, guys. It seems that the July to August transition is where the VIX will bottom out, and after that, the VIX will move up. Now, the only reason why the VIX will go up in this manner is because the S&P most likely will take some profit. Now, this is the CBOE VIX since 1990 to 2023. So this is a 33 years chart. So hence, therefore, you look at it right now, if that is a time where election comes in, right, in the October, November period, that is where things get better. And then the script says that the party that wins will bring the stock market higher. So that's the reason why I believe that, okay, that we should take some profit off the table, then slowly buy in the market at cheap price, and then enjoy the ride in the later part. All right, this is something that I want you to take note. Okay, so with that, it's all right. I hope you enjoyed this video. Share, subscribe, and let your friend know about this. I'll see you next time. Kel signing off. Bye bye.